Now, key level here. Key level is simply, right? I will explain it in a very simple term, right? Key level is simply a continuation entry model, right? Where's your box? Do not favorite those things. Okay. Now, key level simply talk about, let's assume we have this guy as an inducement. Let's assume we have this. Market is moving an uptrend. Now, one thing you should know again is that you treat key level in line with the trend of the market, right? Key level must be in line with the trend of the market. Let's say you have here as your inducement. You have here as your inducement. You have here as your disruption, right? Normally, reclamation states that the market can come to an inducement or a disruption. Any of the two it can come to an inducement and do something like this. Then once you see your engulfed candle, you can take a buy. So this is reclamation, right? Now, same thing can also come to the market can also come to your disruption and do something like this. Give you an engulfed candle. After I give you an engulfed candle, then it can move here from buy. The reason I'm doing this is because the market can go to any of the two, either an inducement or a disruption, right? Any of the two. Now, I say that key level is a continuation entry model, right? Key level is a continuation entry model. The reason why, how did key level start? Yeah, I do not. This is a story that I'm just fabricating, right? I didn't hear it from anywhere. Just a form story. Now, how the key level starts? I don't know how long you've been trading, that whereby you'll be like, okay, this is my point of interest. Let me just go and quickly do something. Then you are now waiting for the market to get to your point of interest. Then along the line, you will notice that the market came to your point of interest and is already moving from your point of interest, right? And you'll be like, Omo, I was waiting for this trade, though, that this market has left me. Now, for key level, there is nothing like the market has left you. You can always enter the market. For key level, there is nothing like the market has left you. You can always enter the market. Now, key level is a continuation entry model. Now, what does key level do? Let's assume, for example, now this market has come to this inducement and it has bought from here and is currently buying. It has come to this inducement and it has bought from here and is still buying. And you miss it here. You miss it here. And you miss it here. That is, the market is already buying, right? And you did not enter from the beginning. Now, key level is what will help you to enter the continuation of it. That is, you miss it from the beginning, you could not enter from the beginning. Right now, you can still enter the market, you will continue the move. That's that for this guy. Are you with me?
Yes.
Now, what is this key level? Now, what you should know before now is that key level is a continuation entry model, right? Is a continuation entry model. Now, what is this key level? Key level in a local term is simply two candles, right, together that can be of the same high, they are equal in high, or they are equal in low. Key level simply means two candles that are equal in high of body. Let's assume we have something like this now, right? And we have a wick on it. Let's assume this is an uptrend. We have a wick on it. We have a wick on it. let's assume this is it now, so this guy don't get it straight. Then we have another guy again of equal body. Let me just use equal now, for example. Now they are equal or almost equal in I. Now what we are measuring, we're not measuring the weeks, so one can be I, one can be short. Now if you observe carefully, now you notice that the 2 weeks are not in the same or the same I. But what is the most important thing is that they should be equal in the weeks. Sorry, they should be equal in the body, right? They should be equal in the body for this key level to hold. Now, if they are equal at the head, the up, yeah, you cannot say that you have a resistant key level. So this is one type of key level. Whenever you see that they are equal above, you can say that you have a resistant key level. A very good example is what we have here. A very good example is what we have here. I want to start from bottom to show you guys many examples. Now, one example is what we have here. Let me go far back. We have one key level here. Let me mark as many examples as I can. We have one key level here. We have one key level here, right? We have another key level here. They are equal in I. So these are examples of a resistant key level. That is, as the market is moving in a particular direction, they are forming equal I. Not equal I, equal body above. That's the key level. Another example of a key level again is this one here. Look at. Now I said that key level can be formed by two candles, a red candle and a green candle. Two green candles should not form a key level. What should form a key level are two different candles, right? And you have to open your eyes very, very well for you to see this thing very, very well. We have another key level here. This is also a resistant key level. Then we also have another key level here. See, it can start with a green candle to a red candle, or a red candle starts to a green candle, and both of them must be together. Like they must be together. It's not that one what's it called, one green candle will be here, there will not be some candles here before the one that will be of equal I. No, they must be like twin aki abopo. They must be together, right? Always like these two now, they are twin. These two guys now, they are twin. Then the next one we have again is we also have this type of key level here. Look at this green candle and this red candle, they are equal. So this is a key level again now. So this is another key level here. This what's it called? Green candle and this red candle, they are equal in I. Another one again that has equal I again is the one above again. I'm just giving as many examples as you can for a resistant key level. They are equal in I again. The next one again is this guy here. I'm sorry, I had to change my charts because the thing wasn't very, it wasn't showing my, it wasn't showing very well. So this is another key level again now. Another resistance key level, right? We also have another one here again. Another resistance key level here again. This is another key level we have again here again. We also have another one here again. Now I've been able to mark as many examples that you need, right? This is a resistance key level again. Whenever they are equal in I, is a resistance key level. All right. Now, before a key level can be valid, there must be a break of structure. Any key level that does not have a break of structure is not valid. What do I mean by that? Now, for these two key level, the normal break of structure that you know, for these two key level to be valid, a candle must go and break above that high that form the key level. For a key level to be valid, for a resistance key level to be valid, the market must go and break past that high that form the key level. For a resistance key level, the market must go past that high to go and break past the high that form the key level before it can be valid. That is, these two guys here now, before it can be valid, a candle must go and break past the high. These two key levels now, before it can be valid, a candle must go break past above the high that form the key level with the body of the candle, not a wick, with the body of the candle, right? With the body of the candle, the market must go break past it with the body of the candle. If you observe here now, this key level we have here now, what will make this key level valid is when the market will break past the high that form the key level, the resistance key level, right? That is when it can be valid. Now let's assume we have these two key levels here now, right? And this guy here broke past it with a wick, then continue this grey candle, it would have not been valid. Why? Because a body candle is what validates your break of structure, must break it. So that's why I say that there must be a break of structure first for this type of key level. Now, the second type of key level is called the support key level. Now, this support key level is the key level whereby they are equal in low at the bottom between a red candle and a green candle. They are equal in low. If you observe this guy here now, you observe that they are equal in low. They are equal in low. They are equal in low in this place here now, right? On that point where they are also equal in low again is here. They are equal in low here. Now, what can make this guy to be valid? What can make this guy to be valid, right, is when this market goes above to break the high of the last break of structure before this guy can be valid. Then we also have a key level here again. We also have a key level here again. This is also what we have again. A key level here, right? Now, the next thing we have again is this. We have a key level here again. Now, if you ask me now, is this key level valid? Yes, it is valid. This key level is valid. Very, very valid. This key level is valid. And this key level, right, move up to break the structure of the previous high, right? Now, you may be asking me, Black Jeff, there are too many key levels in this Forex market, in this chart now. Which of this one am I to respect? Which of this key level am I to obey? All right. Now, remember we started from back here. There was a key level here, right? Now, this is where we started from back here. There's a key level here. There's a key level here. Now, for currency pairs, the best broker you should use on currency pairs when marking key level is forex.com, because it gives you a clear direction. It gives you clarity, right? Now, we have this guy here. We have this guy here. We have this guy here, right? We have another one here again. We have another one here again. We have another one here again. We have another one here. We have another one here. We have this support key level here. We have resistance key level here. We have a resistance key level here. We have a resistance key level here. We have a resistance key level here. A support key level here. Support key level here. Support key level here. Now, among all of these key levels, which one are you supposed to even be looking at? right? Which one are you supposed to be looking at? Now, let me quickly say something before I move to the other types of key level, the other two types of key level. Now, if you observe, where is the current market price? Where is the current market price? The current market price is here. The current market price is here. This is the current market price. Here is the current market price. Now, if this guy is coming down, which of this key level will he get to first? This is the one to get to first. As it is coming down, we have key level here, we have key level here, we have key level here, we have key level here. As it is coming down, which one will he get to first? This is the one to get to first. This one here is the one to get to first. Now, if this one that he gets to first fails, every other key level are no longer valid. If this, as market is coming back down, this is the way the market is currently. This is the current price of the market. This is the current price of the market. Now, as you have labeled everything now, which of these guys here will the market get to first? If you trace now, this is where the market will get to first. Here is where the market will get to first. Here. So this is the only one you will trade. Now, the key level that the market will get to first is the one you are trading with. Now, after then, every other one are no longer valid. Every other one are no longer valid. So this is what you need to know about key levels for the support key level and the resistance key level. Now, do not forget, please take your time to watch this video like 200 million times, right? Now, my X handle is I am Black Jeff all together, right? I am Black Jeff. Wherever you are watching this video, kindly follow me on X, right? Follow me on X and what's it called? Make sure I'll be posting content back to back, right? I'll be posting content back to back. Make sure you are following me, right? Make sure you comment, right? Make sure you retweet. There may be there's somebody out there that is struggling with this thing. Now I've brought solution to you. Let it get to other persons too. So kindly retweet this video, kindly like the video, kindly give a comment about the video. What you think I can do better, or the next topic you want me to talk on, I'm going to talk about it. So kindly follow me on X, which is I am Black Jeff all together. I am Black Jeff, small letter I, that's my handle. I am Black Jeff on X. All right. The other type of key level, do not forget I said something here, that for a key level to be valid, it must first break a structure. If a key level does not break structure, it is not valid, right? What will make this guy valid is because it breaks the structure of the previous high. That is, there must be a break of structure normally for a key level to be valid. This is what I mean by there must be a break of structure for a key level to be valid. So meaning if there is no break of structure in this whole place here, right? If there is no break of structure in this place, let's look at this guy broke above here with a wick. We know that for a break of structure to be valid, it must break this high with the body of the candle. But if this guy decides to break here with the wick, every key level here are not valid. The place to be looking out for will be here. As the market is coming down again, the first one that is valid is what you take as your key level. But in this case now, this guy broke very well. He broke it with the body of the candle. So this key level will hold. So this was okay. I will get there. Now I believe I've been able to explain key level 1, which is a resistance key level level 2, which is a support key level. And I said the criteria for these key levels to be valid is that it should have a break of structure. Now, the next type of key level, the number 3 type of key level, is this. Remember I told you guys something, right? Remember I've said this before. I say that, or we'll be hearing this from, what's it called, a lot of persons, a lot of traders, that they taught us that if you have a resistance, if you have a resistance here, right, we have a resistance here, let's assume this is a resistance now, okay, and this is a support. Bottom here is a support. Now we're taught that if market break past a resistance, that resistance automatically becomes a support, and whenever the market break past the support, that support automatically becomes a resistance. Now if the market break past a resistance, that resistance becomes a support. So what are you expecting? Let's assume the market, this is a resistance key level, and the market break past it like this, right? What are you expecting? You'll be expecting market to come back to that point that the break happens, right, where the resistance turns support, and expect to take a trade from there. Expect to take a trade from there. Expect to take a trade from there. So that's this guy here. Now for a support, whenever the market breaks a support level, that support automatically becomes a resistance where you can sell from. Becomes a resistance where you can sell from. It automatically becomes a resistance where you can sell from. Now let's go on charts. We have these two key level here. This is a resistance key level here. This is a resistance key level here. This red candle and this green candle. This is a resistance key level, right? Now, if you trace your line straight down, that's where you have the key level. If you trace it down, you will notice that a body candle break past it, right? A body candle break past it. You will notice that a body candle break past it. Now, this body candle that break past it, right, has now made this resistance key level to turn to support. We make this resistance key level turn to support. Now if here is a support, what do you buy? What do you do as support? You buy. Now how do you now buy? You do this. If you want to buy, you do this. The two candle that formed the key level, the red and the green candle, you draw a box on it. You draw a box on it. I've still not taught how to trade what's it called? I've still not taught how to trade everything. So I've still not taught how to trade. I will teach you how to trade everything tonight. But for this support, for this resistance becomes support, you will take the two guys here, the two guys that form. Now remember I told you guys that you are drawing from the body, not the wick. For a support and a resistance, you are drawing from the body. They must be equal in body. You are drawing from the body down. A candle must break past it. Now whenever a candle break past it with the body, that resistance key level has now turned to support. What do you do as support? You buy. So you'll be waiting for the market to come on it, you're waiting for the market to come on it, right? Your stop loss will be a little below the box that form the key level, a little below the low of the key level, right? You can have a target of maybe 1:4 risk to reward or 1:5 risk to reward. You are good. So this is how you trade key level. Like this now, gold has closed for the weekend, right, till Monday. But this is what I'm expecting. Although it has tapped my entry already and it's still moving in my direction, I would add a screenshot of the trade to this video. It has tapped my entry already and is moving in my direction. Now, I'm expecting that by Monday, the market will come back and come back to entry before moving upward. So that is how to get this resistance key level that turns support. Same thing for what's it called? Same thing for downtrend, right? Let's say you have two equal low. Let's say you have two equal low. Forgetting about how long the wick may be. How long or short the wick may be does not really matter, right? It doesn't really matter. You have this here. It doesn't really matter. Now, you have to draw your support here. Your support line here, right? You know the market is a downtrend. Now you now then have a break of structure. A candle break past it with its body. Break past that your line with its body. Now, this support automatically has become a resistance. Now, how do you now position yourself? You will take both candles covering both of them that form the key level. You take the high and the low from the body that form the key level. You take both, right? After taking both, you will now expect this market to come down, still coming down, then come back into anywhere into the POI. I consider this as a POI. Into anywhere into the POI. Personally for me, I like to set limits because the market can just come to here before moving your direction. Or it can enter into it very well before selling, or you can just tap on it before selling. Any of this can happen before selling. So this is what happened for a key level that turn a support to a resistance. Now I've been able to explain how SBRO work. Support become resistance. This is also what people call Malaysian support and resistance. This is simply it's called key level. And I've been able to explain what's it called? Resistance key level that turn is support, you buy. A support key level that turn a resistance, you sell. Now, these are two types of key level I've explained. Now, before I move further, now you may want to ask, Black Jeff, right? What time frame should we be looking at? What time frame should we be looking at? What time frame should we be looking at marking our key level? Personally for me, yeah, I would prefer you use the intermediate time frame. Use the 1 hour time frame. That's what I use. I use the 1 hour time frame marking my key levels. 1 hour time frame work best for me. There are persons that I know that use 30 minutes. I don't know about their consistency, but I am consistently profitable with 1 hour time frame. I am consistently profitable with 1 hour time frame. So if you want to be consistently profitable like Black Jeff, use 1 hour time frame to mark your key level. All right. Now, let's assume we do not have this key level here. I want to show you guys how to use a support key level and a resistance key level, right? Now, let's assume we do not have this key level here. Let's assume we do not have this key, this resistance key level here. if this resistance key level it was not here, right, as this market is coming down, which will be our first key level? This support, right? This support. Now this support key level, when you want to now mark this support key level, you will only mark the wick of the two candles that form the key level. You are only to mark the wick of the two candles that form the key level. So after marking the wicks, it can be very long also. You are marking the entire wicks. After marking the wicks of the two candles that form the key level, what should you expect? Expect markets to come into the POI, then you take a buy. If this guy was not here, right, you take a buy. So if this resistance key level that turn support was not here, this would have been our first key level as the market is coming down. So you're always using the first key level as the market is going to that particular direction. And remember, I said there must be a break of structure, right? Now the next thing I want to talk about, this same thing applies to the resistance key level. I just explained support, so you should just be able to do the resistance yourself. Now the next thing you should know is that if this key level fails, now what does it mean for a key level to fail? For a key level to fail, it means that that part you are putting, those two candles, right, that form the key level, if the market goes below it, that key level has failed. Automatically, right, the market should not go below the POI. The market should not go below the POI that formed the key level. The market should not go below the POI that formed the key level. So when the market goes below the POI that forms the key level, that key level has failed. So that is what we have here. Now, what am I trying to say? Let's assume this is our key level now. This is our key level POI, right? And you are expecting the market to just come into it, right, before going your direction. This is how it's supposed to be normally. But when the market then goes above it and break your POI, it means that this first key level, the first one as the market is retracing, has failed. If that first one fails, every other one we cannot hold. Do not trade it. For key level, whenever the first key level fail to hold, the rest can never hold. You just keep making stop, just keep eating SL. So this is how to trade key level. Now let me do a recap. I said that the market must first be coming from a point of liquidity. The market must first be coming from a point of liquidity. What do I mean by liquidity? We have this. Make sure the market must be coming from a point of liquidity. Right? These are points of liquidities. This is a point of liquidity. This is another point of liquidity. This is another point of liquidity. This is another point of liquidity. Now, before you can use key level, make sure the market has come here, tap into this point of liquidity, and has made attempts to move from here before you can use key level, or it has tapped into this liquidity and is moving up from here, before you can trade key level, or it has tapped into this liquidity here and is moving up before you can trade key level, or this last one here, or this last one here. Or this last one here. So the market must have tapped off from this liquidity. So immediately the market has tapped off from the liquidity, you cannot begin to find a key level that you can use to long the market. You can begin to find a key level that you can use to long the market. So this is how you use key level. I believe this video have been very, very helpful to you, right? Do not forget to follow me on X, give a like, give a comment, retweet this video so that this video can get to people that have been finding it difficult to understand key level. I remain Black Jeff for Forex. My X handle is I am Black Jeff combined together. So that will be the end of today's class. Bye for now. Ask your question in the comment section, right? Do not ask your question in my DM. Ask your questions in the comment section and I will answer you there. Bye.